So I'm just going to start. Hi everyone, my name is Veronica. I'm marketing manager in Marosa, and I would like to welcome you to our webinar on e-invoicing. So today we are going to cover this topic from the basics to the fifth corner model and also show you some practical examples. But just before we start, I would like to remind you some of our housekeeping rules. So as you noticed, this webinar is going to be recorded, and afterward, we're going to send you the video and the slides. We also have our Q&A functionality for you to use for any questions or comment you might have, and we will address them at our Q&A session. You should see this option on top of your screens, just next to the view option. To enjoy this webinar in the best view mode, we recommend you that you select the gallery option view, and then you will be able to see the presentation on the main screen and the presenter on the side. And speaking of the presenter, today we have Pedro Pestana da Silva with us. He is the CEO of Marosa with over 15 years of experience in VAT and tax technology world. But I will now hand over to him. So Pedro, the floor is yours.
That's great. Thank you so much, Veronica, as always, for the good presentation. Thanks everyone for joining and see the list is coming up. So I'll go a little slower on this first few minutes because we've gone up about 25 people in the last minute or so. But I will start so we keep on with the agenda. What we will speak about, of course, I'll say a word about Marosa, but then we will go into the basics of the e-invoicing, which is what the topic is about. We will explain what an e-invoice is, we'll explain what are the benefits and why now it's becoming so important. Then we will go into the mechanics of how the e-invoicing model works, what type of tax reporting model exists, and how does the world divide between these models. But then finally, there will be a section where we look at how is our life changing after this e-invoicing implementation. And that's where I hope I can share some practical views on how we see it. Very good. So without further delay, well, before I move on to the next slide, just let me just say, we planned it for about 30 to 35 minutes. We have then 10 minutes or so for a Q&A. And as Veronica said, you can add all your questions as we go on the screen, on your Teams. Two words on Marosa. So we're a tax technology software company. That means we automate work related to tax returns, and we do it internationally. So for all VAT reporting obligations, we developed a software that automates the data extraction, the data analytics, the workflow of approvals, the VAT return generation, and even the submission. So there is a full end-to-end software developed internally by our software developer team and supported also internally from our VAT compliance center. E-invoicing is somewhere where we've been very busy the last 12 months because we're adding a layer of e-invoicing module to our Verify tool. Verify is the name of our software. I will give two more words about Verify in the last slide, but just so you say, just so you know that it is part of our core nature of our services, and it comes with multiple integrations to SAP and other ERP software. Veronica did an introduction of myself already, so just to add, I've been involved in tax technology for the last 17 years, so and mostly on the Big Four, and now in Marosa, which is an exciting part of my job, all the software work and all the strategic work around next steps on technology and what's coming up. Very good. So if I move now to the topic that brought us to this webinar, and let's start from the very basics. What is an e-invoice? And although it's very basics, it might be misleading because some documents are actually of electronic nature and they are an invoice, but they're not an e-invoice. So that's the first thing to say. PDF documents are not an e-invoice. Scanned documents of a paper invoice although they are electronically stored, they're not an e-invoice. An Excel file with the format of an invoice is not an e-invoice. For an e-invoice to be considered a search, it needs to be an structured message that is automatically produced by a machine, automatically sent, and automatically processed. When we say a structured message, we mean what you have in front of your screen right now on the right-hand side. It's really an XML schema in most cases with data that is read by a machine. It doesn't look so. I'm sure if you're looking at the screen now, your left-hand side looks a lot more like an invoice than your right-hand side. But an e-invoice, for all the benefits, to benefit from all the advantages, needs this structure. Yeah. Because that's how machines read it. And let's zoom in this example that I pointed out here. It's actually not an XML extract, it's an object from a JSON file, but I did wanted to bring it up to explain why these files are considered e-invoices. A couple of weeks ago, we were looking at the format on which Verify was going to bring data in order to produce e-invoices across multiple countries, a single file that is consistent in all countries. And we were looking at examples. And when we pass through this JSON file with this data object, our CTO, Moncho, said, oh, that's nice. That's a proper date. Now, if you look into this circle right here, and you are not a developer, there are two items, and you probably agree with me that they don't look like a proper date. But in fact, they are. They're telling us the year, month, the day, the hour, the minute, and the second on which they were issued. What these two items are timestamps. Timestamps is a way of representing dates and seconds universal. So any machine can produce them, any machine can read them in any country. So this logic is what lies underneath the definition of an e-invoice as an structured message. It has to be ugly, if you want to call it, in order to be an e-invoice, whereas a PDF invoice does not look so much like that. Moving on to the next item is benefits of electronic invoices. So we said it's automatically issued and automatically processed. That's quickly said, but it's a big thing. Most companies nowadays are able to produce their invoices automatically, but when they are received, there are many teams that is still key in the data of these invoices into the system. They extract them, they read them, they key in the data. There are also email accounts dedicated for AP invoices at yourcompany.com. There are some OCR that are not reliable. With the invoices, this processing of AP teams will be automatic and it will be accurate. And that's going to make lives a lot better for all finance teams because the timing will be reduced significantly. Yeah? Because the data is received automatically, there is also the possibility of doing multiple connections with ERPs, with banks, with data analytics tools. So you could connect to your bank, you could connect to Power BI, you could connect to SAP and fill in and do the flow of data backwards or in both directions from your billing software into your ERP. The next benefit is reducing cost, and that's another big benefit. France, when they did their study about introducing e-invoices, calculated that an average cost of an invoice is between 12 and 13 euros, a classic invoice, whereas the average cost of an electronic invoice is 2 euros. So that's a big difference, a big reduction of cost. Yeah. And finally, visibility. And this might need explanation because you might say, well, I already have that data. So I already have that information in my system. But what brings visibility is that you will now have it structured in your software. So in a structured, cleaned, and accessible database. That cleansing of data allows you to do data analysis and run dashboards that will help you expecting, for example, the future over your current data. So making predictions and making data analysis, identifying data gaps is going to be a big benefit of e-invoices as and when they are implemented by companies. Right, so we looked at what is an e-invoice, we looked at what are the benefits, but why now? Why now so big? I mean, e-invoices have been around for over 25 years. EDI has been used for since the 90s on exchange of electronic invoices. So why now? Yeah, um, there is this big regulatory trend, boosted very much by tax reporting as well, where e-invoicing is being mandated on all B2B transactions in most European countries and also Western countries and all developed or even developing economies across the world. LATAM has been doing it for over 15 years, so there are over 11 countries in Latin America that have it in place, and they saw the benefits. But you can see here how the list is growing over years, and how by the end of the decade, e-invoicing will be the rule and certainly not an exception. So that is the reason of why now, because of regulation. But what is the scope? And here I can touch base on a couple of usual questions that we're getting. First one is, are non-established companies affected by e-invoicing? The answer is no, with a caveat. Um, that caveat is they do not have to issue electronic invoices on B2B transactions in most countries where they don't have where they only have a VAT number. But all these countries are requiring these non-established VAT numbers to do real-time reporting of their transactions to the systems. So in the end, the effort of putting together an XML file that is sent in real time to the tax authorities database is very much the same effort as sending an electronic invoice. Yeah, so it's a tricky one. So technically they are not affected, but in practice there will be work required by all the VAT registrations. And then which transactions? So e-invoicing has been applicable on B2G for many years. So the classic mandatory requirement for e-invoice is business to government. Yeah. And now it is expanding into the business to business transactions, typically local transactions, where you need to issue and receive electronic invoices through e-invoicing structured messages. Another item is B2C. How about e-commerce? How about the sales to private individuals? What we're seeing is that the countries who traditionally require invoices to be issued on B2C transactions, which are only a few, not all, are actually often waiving that obligation when implementing electronic invoicing. So interestingly, the B2C the obligation to issue invoices on B2C transactions is being reduced as B2B e-invoicing is growing. When it comes to scope, we also speak about data. As you know, on every invoice there is tax data, there is business data, but some tax authorities are actually going further and requesting more information, such as when was the invoice paid? When was the invoice accepted? So all that sort of requirements is making the e-invoice obligation broader. Yeah, and the data that you need to capture also broader. And then finally, I think the tax authorities realized that the information they were getting from e-invoices was very useful, so they started asking for additional information, for example, on transport documents, where where every transport that is locally done, there is a certified document being issued and sent to the tax authorities in real time. And that's again bringing tax and finance teams together with logistics teams. We, for example, in our software for Portuguese certified billing, already have the capacity to do these shipping certified documents and send them to the tax authorities, because Portugal, just like Croatia or just like Romania, have this obligation in place. Right. And let's take a pause here. I went through the definition of an electronic invoice. I went through the um, benefits of e-invoices, and we saw why now and what's the scope. Let's now look at the mechanics. How does e-invoicing work? And I will spend a tiny bit of time on this slide that we have just in front. The four-corner model is something you will hear about more often if you haven't yet when it comes to e-invoicing. It's simple. For every transaction, like today, we have a supplier and we have a customer. Those are corner one and corner four. The supplier will buy a license or will develop a software that will be its corner two. It's a billing software. And the customer will also buy a license or develop a software that will act as corner three. So corner one supplier, corner two software of the supplier, corner three customer software, and corner four the customer itself. The way it works is data is sent from the ERP of the supplier to the billing software corner two of the supplier. The invoice is then sent to the software of the customer and then back to the ERP of the customer. One remark here. How does the software of the supplier know who to send the invoice to? There is typically, particularly on public networks, a public directory where there will be a connection. In PEPL, it's called SMP. There'll be a connection where the software looks up who to send the invoice to and then sends that invoice to the software of the customer. Yeah. So these are the four corner models. That's it. Now, two items we need to understand um, to get a good understanding of the e-invoicing mandate. One is public and private channels. When we speak about channels, I'm speaking about this little arrow here. How am I making this invoice available to my customers? Through which channel? Yeah. Public channels are available for everyone. Private channels are available only to those who subscribe to it. A classic public channel and the most well-known and the most expanded is PayPal. PayPal is so big that countries are actually implementing PayPal as their e-invoicing strategy. It's interoperable, it's international, and it's standard. So it's probably the easiest approach when it comes to implement e-invoicing. But other public channels are countrywide, like Chorus Pro in France or Facturae in Spain. Some private channels, you know them if you heard about them before, EDI, a classic way of sending an invoice, for example, to a supermarket chain. That's an industry that often used or historically used EDI, or SAP Ariba is another private channel that from where you can make your invoices available. So that's on channels, and that's on the four corner model. Let's now look at syntax and semantics. It gets a little complex, but it helps understanding the entire picture. First of all, invoices are sent normally in an XML schema. Yeah, that XML will have a structure. Yeah, and that is what we normally call the syntax. Yeah, the syntax is always or almost always UBL or CII. UBL is a universal business language. Yeah. So it follows a standard syntax that applies globally. Yeah. When it comes to the content, the European Union introduced the EN 16931 standard. That is what should go in the invoice. And that is introduced by the EU at legislative level. So it's a rule. Um, as a content as opposed to the syntax. And then some countries may introduce some, say, customization of the EN 16931 standard. That will be the SIOS. Yeah, that's a country adjustment. But you can go farther down on the adjustments and do some extensions into your invoices. Extensions could apply, for example, industry specific, such as the fuel trading industry that has a lot of invoicing requirements that are specific to that industry. That could conform, that could be part of an extension. The message that you want to take away from this syntax versus semantics is that they all work within each other and they all live within each other. So an extension, it will be part of SIOS. SIOS will be part of EN16931, and the EN16931 will always fit within a UBL or CII syntax in an XML. So this item hopefully helps you understanding the big picture. Most countries are implementing either a UBL with a SIOS standard. Take Romania, introducing it next month. It has the Romanian SIOS. Portugal has the Portuguese SIOS, etc. Now, we looked at all this data that is being produced automatically in a structured way, that is being captured also automatically and is capable of being extracted automatically. So all this would be too tempting for the tax authorities to look away. So this is when the tax authorities come into play and say, actually, as part of this B2B e-invoicing mandate, I do want to know what you're sending. Since it's so easy for you to send it, why don't you send it to me as well? And this changes the game. This is really what is bringing us, the tax teams, together with the billing teams, as I will explain later. But the purpose and the reason for the tax authorities to come in is really actually good news, is reducing fraud and reducing the VAT gap. And e-invoicing tax report, real-time reporting, so CTCs, continuous tax controls, are proving very effective on reducing tax fraud and reducing the VAT gap. So it's indeed good news. Now, the way the tax authorities request this information, it changes from one country to another. So let's look at what models we have in place. What I'm showing you here is the landscape. So maybe you are in your own country and looking at your own e-invoicing mandate. Then one of these models or a combination of these will be applicable in your country. But this hopefully will give you a view on what are the possible options internationally when it comes to e-invoicing tax reporting. Yeah. So the first option is, let's look at this scheme, diagrams right here. We again have the four corners in all three options, correct? In the first option, you have the clearance model. What the clearance model is, it really means that the supplier will send the data to the software. The software will connect to the tax authorities system. The tax authorities will say stamp or validate the invoice, send back that invoice to the software of the supplier, and only then it's sent to the software of the customer. So this is the clearance model. Usual example of the clearance model is Brazil, but also Poland is implementing the clearance model. A centralized model is slightly different. In fact, what happens here is the supplier sends the invoice to its software. The software sends the data really to the tax authorities, and the tax authorities issue the invoice and send it to the customer. So it's no longer the supplier who is issuing the invoice, it's the tax authorities who are issuing the invoice. This is called the centralized model. It's applicable in Italy, the SDI, already for a few years. Italy was one of the first ones introducing e-invoicing. But it would also be applicable post-July in Romania with ANAF, and we will probably see more countries introducing this model too. And then finally, you got the real-time reporting, which as such will not necessarily require a pre-approval of the invoice. Because in these first two models, as you can see, the tax authorities will know about the invoice before your customer does. In the third model, however, you will send the data, issue the invoice to your customer, to your customer software, and then your customer will download it. And only then maybe in 4 days, maybe in 2 days, the invoice will be reported to the tax authorities in real time. Well, in real time, depending on what you call real time, 3 to 4 days. But some remark I would like to make here is that it might actually be immediate. It might actually be real time. And this number 4 and number 2 might, in some instances, happen at the same time. So you send the invoice at the same time as you send it to the tax authorities, like in Hungary. Yeah. But the VIDA proposal, for example, follows this mechanism where you report the invoice on intercommunity movements and supplies within 4 days from the issuance. So those are the last, the three CTC models. And again, let me restate what we explained so far, and so that we understand what's next and what's the consequence. We explained, okay, the definition of the invoice, the benefits, why it's important. We looked at the mechanics, the four-corner model, the tax reporting, the different the fifth corner and the different models on which tax authorities capture data. But what about the impact on our daily life as finance teams? How is our life going to change with e-invoicing? And it's going to change significantly. First of all, because of the fifth corner, because of the tax authorities coming in, we will now have two teams together, the billing teams and the tax teams. And of course, because it's a software-based and IT in nature obligation, there's a third theme which will be software. So software, billing, and tax teams will come together. Yeah. If you are part of a tax team in a large multinational, you already know about coming together with another team. That was the software team. So 3-4 years ago, we started interacting a lot more with the software developers. Now we will interact a lot more also with the billing teams. Additionally, with this real-time transaction detail tax reporting, the way we do our current tax reporting is going to change. Let's just remember how we work in finance in-house teams at the moment. Most international companies, at the end of the month, when it's closed, they pull a data extract, a VAT report from their SAP or from the ERP they use, and they start a process of data manipulation, data calculation, postings, very much data reconciliation. And only then, only once the GL has been reconciled and all the data is ready, the return is prepared, paid, and submitted. Yeah? Only then. But that happens in a period of 30, sometimes 40, 50 days. Uh, this is totally going to change going forward because our team will need to validate or handle errors from the system of the tax authorities as and when they come, and they will come daily in real time because we will submit our invoices in real time. So this old VAT work, VAT return work, is going to change very much. So that's a big change in our finance teams. And then finally, data, master data, and data quality are going to become a cornerstone of tax and finance teams. Excuse me. I should have apologized for my calls before they start because I do, like many others in Europe nowadays, cough quite often. So data validation and data quality will be key. And improving that data quality will be part of the finance teams, as I will show you in a second. Yeah. So let me show you this screen. This comes actually from an existing obligation, a real-time reporting of transactions that applies. In this case, is Spain. It's an extract of our SII software. When you are preparing your VAT returns, and VAT returns will probably still exist for a good amount of time, you will need to reconcile your data with the data of the tax authorities. So you will need to match what's on your system, which you can see on the left-hand side, with what's on the system of the tax authorities. And whenever there is a gap, you will need to take action. So this is indeed part of the VAT return work post then, reconciling data, yeah, at transaction level. You need to make sure that what the tax authorities have will reconcile with what you have in your system. But now let's look at how the daily work of tax teams will look like when we implement this four-corner model connected to tax reporting. We have right in front of your screen the first and second corner, as I explained earlier, the supplier and the supplier software. And then we have the fifth corner here, which is the tax authorities. Data, let's follow the steps. Data will be sent to the billing software, who will then issue an invoice and report it, whether in one model or another, to the tax authorities. The tax authorities will carry out validations, sometimes data validations, but sometimes tax logic validations. And those validations might come back with an error, and that error needs to be handled. Once that error is handled, the data is then sent again to the billing software and sent again to the tax authorities, now with a correct response message from the tax authorities. So this process of handling errors and correcting them and reissuing the invoice data, it will be a big part of tax and finance teams going forward. If you don't do this, if you don't handle this error, the tax authorities will have a VAT return right here in red that does not match your VAT return in your system. And that's going to create questions, probably automatic. Let's give you a real example of how this could work. You, as part of your large organization, have your sales teams issuing invoices, or at least entering the details of the customers that they close in the billing system. So they close a customer, they enter the details, and then the invoices will be issued. One of your sales team person in France, for example, closes a sale to a German customer, a sale of goods. And he indicates the German client details with the German address and a German VAT number. But the sale actually has a ship from France and ship to France. That's France to France. French VAT will be added. And when you send that invoice to the French tax authorities, the tax authorities will reject it, saying that VAT number, which is a German VAT number, is not identified by our system. So that is the consequence of an error on your master data. And that error will be handled the day after the first invoice is issued. So it's good news. Your data quality will improve as and when you introduce real-time reporting and e-invoicing in your organization. Yeah. This cycle works like a dishwasher of data. It will cleanse your data gradually, and it will improve it um, um, daily. For this, you will need workflows. You will need a clear set of responsibilities, and you will need constant monitoring. And that's it when it comes to e-invoicing and my presentation, which leaves us with the last 10 minutes for questions. Just two words on our software. So Verify is our VAT reporting software. It automates the VAT return work for all European and outside Europe countries. It has a component of data extraction, data analysis, workflow, and data reporting. We are actually submitting returns automatically in an increasing number of countries, and you can use it as a license within your team as a pure SaaS. So you buy the license from us, and we install it in your team with our support, or you can use our managed services. You can use our help using the tool. So we handle all the returns as a usual tax advisor, but with all the benefits of our reporting tool. E-invoicing comes into play because what we're doing is we're adding a module on Verify that will issue and receive electronic invoices, will handle the tax reporting of those electronic invoices, and will reuse the data of those electronic invoices in your VAT return. Why? Because we're very well placed to handle this new obligation. In the end, like I said earlier, billing teams and tax teams and IT teams are coming together. You will need to know why that French invoice came with an error, why that Gemma VAT number was not valid. You need someone with tax knowledge, someone with software knowledge, and someone who speaks to your billing team to explain the difference. And that's where Marosa adds value. So if you want to see a demo, we're happy to coordinate it and schedule it after, well, next week or the following.